Hi, welcome everyone. Thank you for joining the webinar today. My name is Cooley. I'm the Targeted Outreach Director for the Department of Financial Protection and Innovation. We're going to get started in about 2 minutes. I want to make sure I give everyone a chance to jump on the webinar before we start diving into the content. Okay, so 2 minutes. All right. Again, hello, everyone, and welcome to the webinar. My name is Cooley. I am the Targeted Outreach Director for the Department of Financial Protection and Innovation. First, I want to thank Senator Anthony Portantino for helping us get this webinar together, and I'd like to give him a little time to talk to you. Oh, Senator, you're muted.
There we go. Good evening, and thank you, Koo, for introducing me, and thank you, everybody, for being here. I mean, obviously, as the father of a college junior, I know full well how important financing college is, and student loans and debt and everything that you're all going through. So very, very pleased to be here tonight. And we have a great panel of experts who are going to help us navigate the world of student loans, provide an update regarding the federal government announcements and student loan forgiveness. I know thousands of Californians are struggling with the burden of student loan debt, and that's why we're here tonight. And so we've got several hundred people who have signed up, and we've got a great panel who are going to talk to us about it. I also want to thank the education institutions who have helped spread the word tonight. We've got the Association of Independent California Colleges and Universities, California Institute of Technology, the Claremont Graduate University, Claremont McKenna, Harvey Mudd, Tech Graduate Institute, Pacific Oaks, Pitzer, Pomona, Scripps, Glendale Community College, University of Laverne, Citrus College, PCC, and College Access Plan. I want to give a special shout out to Next Gen Policy and the California Department of Financial Protection and Innovation for working with my office to put this event today. I want to give a shout out to my staff that's been working to get the word out. I am confident that you'll all benefit from the information provided tonight. So, and if you have additional questions or concerns after today, you can contact my office, and I'm sure the panelists will give you some resources as well. We do have a deadline, right, folks? We're up against a deadline to apply for some of this relief, and so that's why it's really timely that you're all here tonight. So again, I'm State Senator Anthony Portantino saying thank you for participating, and thank you to the panel and organizations that brought us here tonight. So I'm going to send it back to you, Koo.
Koo, I think you're on mute.
Sorry about that. Yeah, I was just saying thank you again, Senator, for putting this thing together. A lot of really great information. So let's go ahead and get started. I do want to introduce the panel really quickly. Again, my name is Cooley. I'm the Targeted Outreach Director for the Department of Financial Protection and Innovation. Selena.
Good evening, everyone. My name is Selena Damian, and I am the Student Loan Servicing Ombudsperson at the California DFPI. Glad to be here tonight.
Thanks, everyone. I'm Samantha Sang, the Legislative Director and Policy Advisor at Next Gen Policy, also known as Next Gen California, part of the Campaign for California Borrowers' Rights Coalition. Happy to be here today and passing it off to Aisa.
Good evening, everyone. My name is Aisa Canchola Bañez. I am a Senior Advisor for Policy and Strategy with the Student Borrower Protection Center. Very excited to join you all, and looking forward to the conversation.
Thank you, and thank you to all the panelists. Okay, let's jump right into it. First things first, just a quick disclaimer. For this webinar, your microphones, video, and chat has been disabled. and will remain so for the rest of the webinar. But if you do have any questions, please feel free at any time to submit your questions through the Zoom's Q&A function. We have a dedicated question and answer session that's going to happen right at the end of the webinar, but my team of panelists will be answering any kind of questions they see come through if they can. So please feel free to submit your questions to us. Also, this webinar is being recorded, and we will share the video out as soon as the webinar completes. These slides will also be shared after the webinar. Okay. Go ahead, Sam.
All right. Thanks again, everyone. And just a huge thank you to all the co-hosts for this workshop. Again, to Senator Portantino, DFPI team here. And this was also co-hosted by us, the Campaign for California Borrowers' Rights. And we're just a coalition of, we're a leading statewide coalition of students, higher education advocates, and borrower protection organizations trying to fight for borrowers across multiple generations at every stage of kind of their loan experience, and trying to level the playing field so that you can access the resources and information that you all need. And our coalition is co-led by 5 organizations: the Student Borrower Protection Center, which we're happy to have Aisa here from that organization, Student Debt Crisis Center, Next Gen California, that's us, Consumer Reports, and Young Invincibles. And I will pass it off now to Selena.
Thank you, Sam. Good evening, everyone. I'd like to start off just by sharing a little bit about who we are and what we do. DFPI is the state's consumer protection agency. We are formerly known as Department of Business Oversight. So we have been around for a while, just had a recent name change in the past few years. A lot of changes, actually good changes. But some of our duties and responsibilities include to license and examine companies of financial products to ensure compliance. This includes student loan servicers in California. We take and investigate consumer complaints, take legal actions when companies are not in compliance through our enforcement division. We conduct education and outreach to enhance consumer awareness and to protect consumers from fraud and abuse. Next, please. Let's go over some numbers. How much student loan debt do we have in California? There are 4 million Californians that owe approximately $156 billion in federal and private student loan debt. Most of that is federal debt. In 2019 and 2020, 46% of California college graduates had student loan debt, and 35 to 49-year-olds owe the most debt on average, with women taking on more debt. The average debt load of a California borrower is approximately $37,000. And prior to COVID-19 pandemic, approximately 500,000 borrowers were behind on paying their loans. In the United States, student loan debt is now the second highest consumer debt category after mortgages, totaling nearly $2 trillion and growing on a daily basis. Next, please. So what protections do borrowers in California have? There are protections that have been established by the Higher Education Act through the federal government, but these have not been enough to help borrowers avoid the student debt crisis that we are in, avoid these balances from increasing. So states had to step in. California in 2020 introduced the California Student Borrower Bill of Rights as Assembly Bill 376. It was signed into law and became effective January 1st of 2021. It applies to student loan servicers doing business in California, including state licensed servicers, as well as banks doing servicing. And just briefly, servicers are the borrower's main point of contact. Student loan servicers are the company, the agents that people are calling when they need information on their payments, where to send their payments, where they get their bills, information on their repayment plans and forgiveness programs. They are the borrower's main point of contact. This borrower protection applies to borrowers with both federal and private loans. And California is only one of 13 states that has advanced established legislation to strengthen the oversight of student loan servicers and to protect borrowers, which was missing on the federal level. What it does, it prohibits servicers from engaging in abusive, unfair, or deceptive practices, and it requires that servicers work in the best interest of borrowers and provide accurate information with the goal of avoiding delinquency and default. When a borrower calls their servicer, they have to act in their best interest and provide the accurate information about repayment plans and forgiveness plans, all the relief options that are available, and not just put borrowers in forbearance or default. It establishes special protections for military borrowers, borrowers working in public service, older borrowers, and borrowers with disabilities. It established my position, the ombudsperson position. As the ombudsperson, I work with other states, state and federal agencies. I work with organizations such as these nonprofit advocacy organizations to stay up to date on all the updates, work with them to see how I can help borrowers the best way, how DFPI can help borrowers as a consumer protection agency. I conduct outreach and education such as this one, and I work with borrowers directly on a daily basis to help them understand their rights and their options. Next, please. Before we dive into our updates, just want to also give an overview on the difference between federal and private loans. It's going to be very important for all borrowers before they get started, before they decide what action to take. They need to find out what type of loans they have. A borrower will either have federal or private loans. Federal loans, you have your direct or Stafford loans. There are two types of direct loans. They are subsidized and unsubsidized. The difference between these two are that subsidized loans, the government pays the interest while the borrower is in school. Interest does not start accruing until after a borrower is out of school. Unsubsidized loans is where the borrower pays the interest from the time of the disbursement. So these loans add the interest to the loan balance as soon as they're dispersed, and it increases the size and the ultimate cost of the loans. So interest is being accrued on a daily basis on these unsubsidized loans. You have your Direct Plus loans, which have fixed interest rates and are also unsubsidized. You have your Grad Plus loans and your Parent Plus loans. These are available to students pursuing graduate degrees or to parents of undergraduate students. These Direct Plus loans do have higher interest rates, and they have origination fees, which cause these loans to be to cost more in the long run. Then your Direct Consolidation loans, once a borrower has these direct loans and Direct Plus loans, they have the option of consolidating all their loans into one single loan with a single servicer and a fixed interest rate. There is no cost to the borrower to consolidate their loans, but it may increase the total balance of the loan since it is similar to refinancing. Then you have your loans, your federal family education or FFEL program loans. These are subsidized loans that are made by a private lender, but they are insured by the Department of Education. These were discontinued in 2010. You have your Perkins loans, which are subsidized loans made by schools to undergrad students and are based on financial need. These were also discontinued in 2017. However, a lot of borrowers still carry these type of loans, and it's going to be important to determine if you have these type of loans in order to identify what steps to take for Pslf and for other relief. So these are the type of federal loans, most of them that are available that have been dispersed to students. Next, please. Then you have your private loans. So once a borrower has exhausted all their federal loans, they're able to obtain private loans. These are loans that are made by lenders such as banks, credit unions, state agencies, or directly from the schools. These private loans are not funded or subsidized by the federal government. They do not offer the flexible repayment terms and forgiveness options provided by federal student loans. So some of the programs that you will hear today, well, most of them do not apply to private loans. In order to obtain a private loan, it requires an established credit record and a cosigner. Very important to know that once you refinance your federal loan into a private loan, you cannot revert that loan back to a federal loan. So it's just, if you're making that decision or if you're thinking about it, it's just something, just make sure you read and understand the terms of the loans and the pros and cons of doing it. Next, please. Now I will hand it over to Aisa for some federal student loan updates.
Thank you so much, Selena, for that incredible overview. So at the federal level, we've had a good amount of updates that we're planning on going through with y'all this evening. So as a result of Congress passing and the president signing the CARES Act, federal student loan payments have been paused through 2022. And interest rates have been set at 0% for eligible federal student loans. These included borrowers with direct loans or other loans owned by the Department of Education. And during this time, servicers have been required to report to credit reporting agencies as if borrowers have been making payments on time and in good standing. Additionally, any loan in delinquency has also not been reported over the course of the payment pause to credit reporting agencies as well. And then an important update here as well is that the Biden administration announced the payment pause extension will expire on December 31st, 2022. So borrowers are encouraged to begin preparing for payments to restart as of January of 2023. The administration also announced the availability of a one-time account adjustment for income-driven repayment or IDR qualifying payments for direct loans and other federally managed and held FFEL loans. These are the loans under the Federal Family Education Loan Program. These are folks who have been enrolled in an income-driven repayment program, and it was really in response to years of borrowers having to face significant barriers with their servicer to enroll and to stay in an income-driven repayment plan. So in response to that, the administration is going to offer borrowers to get credit for certain circumstances. These include, any months where a borrower made payments regardless of their repayment plan that they were enrolled in. That would also include, the payments made over 12 or more months in consecutive forbearance or 36 or more months of cumulative forbearance. This forbearance process was a common servicing practice where borrowers, instead of being enrolled in an income-driven repayment plan where their payment could be drastically lowered, instead their servicers were steering them into forbearance rather than enrolling them in a program that could eventually steer them towards forgiveness. So under this IDR account adjustment, borrowers could potentially get credit for 4 months in forbearance. The account adjustment would also include any months in deferment prior to 2013. So this will be very impactful for folks. The federal student aid at the federal level estimates that these changes will result in immediate debt cancellation for at least 40,000 borrowers under Pslf, and several thousand borrowers with older loans will also receive forgiveness through income-driven repayment. So for total, more than 3.6 million borrowers will receive at least 3 years of additional credit towards IDR forgiveness. And these changes were really part of a sweeping effort by the Department of Education over the last year or so to reform and really repair some of the harms that were done towards student loan borrowers as a result of servicing mismanagement and abusive practices, as Selena had referenced before. And so with that, I will turn it back over to Selena to go over the public service loan forgiveness waiver.
Thank you. Thank you. That was great. Okay, so now we will talk about public service loan forgiveness. This is another change that there's been another change to this program, again, as Asa mentioned, as a result of just everything that was not being done correctly. So let's talk about PSLF. PSLF was a program that was created in 2007 to encourage individuals to enter and remain in public service where they may earn less than those in the private sector. Under the program, student loan forgiveness is granted after satisfying certain criteria for 10 years or 120 payments. The traditional PSLF requirements are that a borrower has to have the right type of loan. So they have to have a direct loan. They have to have the right type, be under the right type of repayment plan, which is an income-driven repayment plan. They have to have the right type of employment. So a qualifying employer would be a government agency. It can be a state, county, city, municipal. It can be a school district. It can be a water district, military, tribal, or a 501c3 nonprofit employer. Those would all be considered qualifying employers, and you have to be employed full-time, or which is 30 hours a week, or whatever the employer considers full-time. Then you must have the right number of qualifying payments. They have to be 120 payments, do not have to be consecutive, but they have to be in full and on time. Next, please. So in 2017, 10 years after the program was created, when the first batch of borrowers applied for PSLF forgiveness, there was almost 99% denial rate for not meeting the program requirements, again, due to the issues that we've been mentioning. Therefore, the Department of Education created this waiver October 31st of last year, where most of the PSLF qualifying payment rules have been suspended through the end of this month, October 31st. Borrowers should apply even if they were denied before or do not have the 120 qualifying payments. And approximately 130,000 borrowers, probably more now, have received cancellation since its announcement, relative to fewer than 20,000 before the waiver. Next, please. So let's go over the PSLF waiver requirements and changes. So under traditional rules, you have to have a direct loan. Well, under the waiver, you are able to consolidate your FEL, Perkins, or other federal loans, those older loans that I mentioned at the beginning, into direct loans. When you consolidate under the waiver, you can receive credit for previous payments made on those loans. So under traditional PSLF, you can consolidate the loans, but you will start at zero when you consolidate. It basically resets your count. So during the waiver period, your count is not reset, and you will receive credit for payments made on those non-qualifying loans as long as you consolidate. Parent plus loans are not included unless they are consolidated with the parent's own student loans. The employment requirement has not changed. The only difference is that if you apply during the waiver period, a borrower does not need to be in that qualifying employment at the time of forgiveness. For the qualifying payments, during the waiver period, any past periods of repayment, whether or not a borrower made those payments on time for the full amount due or on a qualifying repayment plan, will count. So previously, when a borrower was paying 1 cent under, 1 day late, making payments ahead of time, making large payments, they were not being counted properly towards PSLF. Also, certain periods of forbearance and deferment may count. That's going back to the IDR adjustment that Aisa was mentioned earlier. So all these changes go hand in hand with the goal of giving borrowers more credit. Also, very important to note, all the COVID forbearance months count towards PSLF. So all the borrowers that had their payments suspended for these 2.5, 30 months, I believe, will receive credit towards PSLF as long as they were working with a qualified employer. Next, please. So what does a borrower have to do to find out if they qualify or if they benefit from the waiver? Well, first you need to find out if your employer is a qualified public service employer. FSA has a great employer eligibility search tool where a borrower you do not even have to create an account. A borrower just goes onto the website. You will need the employer's federal employee ID number. You can find that on your W-2 forms. You can find that on Google, on paychecks, but you will need that number to check eligibility. So you will see there, if you enter an employer that has already gone through the program, or you'll see that it's already been certified. If you don't find the employer, or it shows that it doesn't qualify, but you think it meets the requirements of a 501c3 or a government agency, still go ahead and apply. It may only mean that no one from that agency has applied for Pslf. And then you do need to find out what type of loans you have. You can log on to studentaid.gov and you can download all your aid data there. You do need to find out whether you have direct, if you have those older federal Perkins loans, because those are the borrowers that are going to benefit the most from the waiver. The program will continue, but before October 31st at the end of this month, any borrower that has those federal Perkins loans can consolidate their loans to receive back credit. The consolidation is done on the studentaid.gov website. Again, you do want to complete the consolidation process or the application on the FSA website in order to get credit before October 31st. So you don't have to finish the process. If you started consolidation and your PSLF application now, you will not get a response by the end of the month. But as long as you have taken the steps to do the consolidation, if you need to, and use the PSLF help tool by October 31st, then you qualify, you can benefit under the waiver. The next page, please. And this is just what the PSLF application looks like. It's not very long. It's only 2 pages. When you use the help tool, you will be filling out this information or pre-filling out this information. Then you will be able to download and print this. You do have to submit this to your employer for a wet signature or a real signature. They're not accepting digital signatures at this time, so you will have to obtain the signature. I cannot stress enough how important it is to make sure these dates are complete, make sure you're verifying that the FEIN number are correct. If you use the help tool, you shouldn't have any issues with the FEIN tool, but really make sure the dates are clear, that it's legible, at least that the title and the email, everything is clear, so there are no delays or denials. If a borrower is not able to get in touch with a previous employer, there is a way where you can submit your W-2 forms, documentation to show that you were working during that time. But I would advise to, if you can, do your due diligence, reach out to the employer to get these signatures so there are no delays and you're not waiting in a separate line to get certified manually from Department of Ed. On the next slide is, I believe, now I'm handing it back to Aisa to talk about the Biden student debt relief.
Thank you, Selena. And I just wanted to thank you so much for all of the work that you do on behalf of borrowers. You know, as California residents, we are so lucky. An office of the Student Loan Ombudsman and such a helpful resource. So just wanted to recognize all of the work that DFPI and the Student Loan Ombudsman have been doing on behalf of borrowers. So just to go over this most recent announcement from the Biden administration, another, you know, very exciting update on behalf of borrowers with student loan debt is, you know, about a month ago, back in August, in recognition of, you know, the harmful economic impact of the student debt crisis, President Biden announced a broad-based debt cancellation plan. This plan would provide up to $20,000 in debt cancellation for borrowers who had previously received a Pell Grant to attend college and who meet certain income requirements. The plan would also provide up to $10,000 in cancellation for borrowers who did not receive a Pell Grant but still meet certain income requirements. Eligible borrowers must have earned under $125,000 as an individual or $250,000 as a married couple or a head of household in either the 2020 or 2021 tax year in order to be eligible. For the majority of borrowers, an application process will be required, and borrowers will have until December 31st of 2023 to apply for this forgiveness. So this forgiveness program is separate and apart from the Pslf program that Selena had just mentioned, and the Pslf waiver and the upcoming deadlines. These are two separate programs. You could, if you're considering, and if you are in a public service job and considering Pslf, definitely apply. You can still also apply for the debt cancellation program as well. Unlike the Pslf program, which does not have a cap on the amount of forgiveness that you can earn, this broad-based debt cancellation program does have a cap of either $10,000 or $20,000, depending on your Pell Grant status. In order to get more information, you can log into studentaid.gov to find out more information on the timeline and various requirements, and as well as more details on the plan at studentaid.gov/debt relief announcement. Taking it back to the application process. So as I had mentioned, the majority of borrowers will need to apply, and I will go into further detail on what we know about the application process. But there are certain borrowers who will already have income information shared with the Department of Education, either through previous enrollment in an income-driven repayment plan, and could be eligible for automatic cancellation. The Department of Education has also established a process for those who are not interested in cancellation, an opt-out process, and more information will be coming out on that front as well. But we are very excited to see this announcement, or this program announced, and are keeping folks as updated as possible as we get more information out of the administration. As part of this announcement as well, the administration announced that they were going to be extending the student loan payment pause through the end of this year. And so that's why we've been encouraging borrowers to get prepared for payments to restart in January of next year in 2023. And the administration also announced a newly proposed income-driven repayment plan, which would significantly lower the amount of payments that a borrower would be required to pay on a monthly basis. I will say this is a proposed plan. We are still waiting for final details to come out, and for the plan to go through a federal kind of regulatory process. But please stay up to date with us and with the Student Loan Ombudsman's Office for more details on when this newly available income-driven repayment plan will be off the ground and available for borrowers. Next slide, please. So back to the application process. So the administration actually just today, earlier this morning, unveiled a preview of the application process. And so this is what we know as of today. So the application process will formally go live this month in October. And borrowers will have, once again, until December 31st of 2023 to apply. So this gives us just over a year window to submit your application for forgiveness. And borrowers have been told that it would take several weeks for their application to be processed and forgiveness to be applied. The application process is expected to be very short and simple. So you will not be asked to provide income documentation in advance, or in order to submit your application. You will not be required to submit an FSA ID. The application is expected to be kind of a self-attestation of your income and relevant information. And then the Department of Education will reach out to you and confirm that they received your application, and will provide you any additional information that they might need from you in order to get your application processed. The application will be available online. It will be available via mobile device, as well as the department will make a paper application available for borrowers to submit as well. Most importantly, the application will be available in both English and in Spanish, and accessible to people with disabilities as well. I will say, as of today, the application is not live. This was just a preview of the application. We do expect the application to still go live this month, but just wanted to make sure to be very clear. There's no application right now, but we are very much expecting this to come out and looking forward for it to come out in the coming weeks. Next slide, please. So let's go over the loans that are eligible for relief under this program. So Selena had, at the top of this presentation, gone through all of the various federal loans and distinctions between private loans. So this cancellation program is only available for federal student loan borrowers and will only apply to loans managed and held by the federal government. These include all federal direct loans. These are subsidized and unsubsidized loans, parent plus loans, so loans that parents take out to support their children to attend college. Grad plus loans, these are loans that are taken out as a student finishes undergrad and is entering into a graduate program. So it does not matter if you took out the loan for undergraduate or a graduate degree, as long as it's a federal loan, and direct consolidation loans. It also includes other loans held by the federal government. So these include loans under the now defunct Federal Family Education Loan Program that are held by the Department of Education, federal Perkins loans held by the Department of Education, as well as all defaulted loans that are held or commercially serviced. So this includes defaulted subsidized Stafford loans, defaulted unsubsidized loans, defaulted parent and grad plus loans, as well as defaulted Perkins loans that are held by the department. One of the ways that I kind of like a quick and easy way to know whether your loan could potentially qualify under this separate one-time debt cancellation program is if your loan payments were paused over the course of the pandemic, your loans are
Oh, looks like we might have lost.
here to an. Hello.
Sorry, Aisa, you had cut out for a minute.
Oh, sorry. Can you hear me now?
Yep, you had stopped that if your loans were paused during the pandemic.
Got it. Thank you. That's an important distinction. So if your student loans were paused over the course of the pandemic, your loans are extremely likely to be eligible for this debt cancellation program. So that's kind of my quick and easy way to determine that. We will go over some resources on how to determine whether your loans are eligible later on in this presentation. So I would like to point your attention to the red text at the bottom of the slide. So as of September 29th, privately owned FEL or Perkins loans, these are loans not held by the Department of Ed, are not eligible for potential debt relief under this broad-based debt cancellation program. This only applies to this cancellation program. These programs or these loans are eligible for consolidation under Pslf. So, again, stressing separate and apart these programs. But unfortunately, for this one-time broad-based debt cancellation program, these loans are not eligible for relief under this program. Next slide, please. So in the meantime, there are ways that you can prepare as the administration works towards fully implementing this new and exciting program. So, as my mom always says, knowledge is power. So we encourage folks to sign up for updates and updates to stay in the know on when the application will formally be unveiled, any other important details or developments as we head towards the application going live. We strongly suggest folks to sign up for updates on www.ed.gov/subscriptions. If you go onto this page, there will be a box for student loan relief updates. Click that box. That's how you will get very, very in the know. You'll be able to stay in the know on developments. Department of Education. We also strongly advise folks to subscribe for the DFPI newsletter to stay up to date on additional updates and programs and webinars and resources like these as we head closer to this program and other debt relief programs underway. The other way is you can, just be aware of your eligibility. Check your income status for the relevant 2020 and 2021 tax years. We also advise for folks to log in and create an account on studentaid.gov. Studentaid.gov should be your best friend on all things student loans. But on studentaid.gov, you can verify your contact information. You want to make sure that the Department of Education has your most updated phone number, email address, and an address to get information directly from the Department of Education, the official agency charged with implementing this program. This is also the website that you will be able to check and confirm whether you received a Pell Grant, and therefore can determine how much relief you are eligible for. You can also check and confirm the types of student loans that you borrowed on this website and determine who specifically, which servicer is your servicer for your relevant student loans. And then we also advise folks, once you have this information, to create an account and log in to your servicer's account and make sure that they have your contact information on file and ready to go. So there are some very clear and tangible ways that you can set yourself up for success once this application goes live. And we strongly suggest folks do that sooner rather than later. Next slide, please. So unfortunately, with any new relief program, scammers are never too far behind and are oftentimes very quick to try to take advantage of our communities and of consumers. So, we've already heard, and I know that I get several calls every day now, claiming from organizations claiming that they are here to help me qualify and apply for student debt cancellation under President Biden's new debt relief program. So scammers are reaching borrowers by phone, by email, and mail with very official looking logos. They promise to step in on your behalf and reduce or eliminate your student debt, offer you quick ways to get loan forgiveness, and say that you'll miss out on eligibility if you don't work with them. And then they promise special access to repayment plans, new federal loan consolidations, or loan forgiveness programs. The tricks, the things to watch out for here is, they tend to ask for advance payments to get, access to your information and to help you navigate this process. I will say you will never have to pay to get access to debt relief and income-driven repayment plans through the Department of Education. These are rights under federal law, and you will not have to pay an organization to do that. So another thing is that they'll tend to ask you for personal information, like your FSA ID, your username, and your password. They are doing that in an attempt to steal your identity. So these are all things to be mindful of as we head towards this loan forgiveness program getting off, getting rolling. Next slide, please. So tips to protect yourself. The Department of Education is conducting, they announced last week, a full-fledged information campaign on ways to protect yourself from scammers claiming to support you as you navigate debt cancellation. So as I had mentioned before, there's nothing a debt relief company can do for you that you can't do on your own through the Department of Education for free. Loan servicers and the federal government do not call borrowers on the phone. So if somebody is trying to reach you by phone, that should already kind of put off red flags for you. But if you get a letter or an email from an organization or a company, do your research the company. You can go directly to studentaid.gov to see the status of your loan, the status of your application, and any other relevant information. It's important to go to a .gov website. That's how you know it's reputable, and that's how you know it's the federal government. And if you do need help on your payments, call your servicer directly. And do not subscribe to any kind of monthly service offering help. There are these new, scams that we've been finding that offer, for a monthly fee of $20, they will help, monitor your account and help you get first dibs on cancellation and relief. Please do not do that. The federal government, the Department of Education, and servicers are required under federal law to help you. And also, utilize the resources here today, DFPI, as well as ombudsman at the federal level to determine, whether or not something is fraudulent and file a complaint. Next slide, please. And so these are, three very, very important complaint systems. The federal student aid that's within the Department of Education has a complaint system. If you have not been able to get through to your servicer, if you are, experiencing a scam, please make sure to submit a complaint at studentaid.gov/feedback. The Consumer Financial Protection Bureau, a federal agency charged with overseeing servicing at the national level, also has a complaint system, and they are very responsive, as well as California DFPI complaints. This is a resource that, as California residents, we're so lucky to be one of a few states that have, an ombudsman and a DFPI that's so dedicated to protecting consumers across the state. So definitely utilize these resources, and please do not be afraid to reach out. Next slide, please.
Okay. Thank you, Aisha. A lot of really great and ton of information to go through there. I do want to also highlight for all borrowers, student borrowers out there, definitely want to be aware of all those student loan scams that are being. We're seeing a big trend of them happening right now, so please be aware of them. Try to protect yourself. Okay, questions. We have a lot of great questions right now. Let's jump right into it. I will ask the panelists, please feel free to jump in if you see any particular questions that you want to ask right away. I have one that came through to my email. It shouldn't be too hard to answer. It says, I have one subsidized and one direct unsubsidized loan, both under $10,000. Will these qualify for student debt relief? So I don't know enough details, but I would say, generally speaking, based on what you're saying, it won't matter whether you have a subsidized or unsubsidized, so long as it's a direct or a federal loan. It will be qualified for debt relief. Also, you have to make less than $125,000 a year, $250,000 if you're filing jointly. Okay. I do want to remind everyone that the webinar is being recorded and it will be shared to everyone who registered for the webinar. We will email you the link to rewatch it, and the slides will be available as well. Okay, questions. Here's one that's interesting. I'm going to summarize it. It's a long question. I'm a paraplegic. I attended college and took out loans. And then basically you attempted to apply and fill out for Social Security Administration to pay for disability. And basically something happened to the program so that you no longer qualify for to be forgiven. Okay, so and again, panelists, correct me if I'm wrong here, but if you have total disability, you can actually apply for total disability discharge. You will have to go through the studentaid.gov website, and there are some forms to fill out.
That might be what he's talking about. Sorry, Nownet is a servicer for the total permanent disability, so he may already have applied. So he can reach out to me, since this is really specific. Maybe he already went through the process. The good thing is it sounds like he might have federal loans, so he would apply for the Biden relief. But again, he can reach out to me and we can look at possibly maybe appealing or finding out why the TPD didn't go through.
Yeah, total disability discharge is definitely a thing. I don't think there's an expiration on it. And again, correct me if I'm wrong. I don't think there's an expiration on it. But you do have to go through the Social Security Administration, or SSA, to verify your disability. So thank you.
That's right. And just to echo Selena, I think with this very specific case, it's always good to reach out to the student loan ombudsman, and then also we could refer the case to the FSA ombudsman if need be. So there are resources to reach out to.
Great, thank you, Aisa.
Cool. There were a few questions, if I can jump in, about the difference between the Biden relief and Pslf, and whether they can apply for both or they should apply for both. Borrowers can benefit from both. So it all depends on your loan balance, if it's something that you want to pursue after you find out if if and how much you qualify under the Biden relief. And then if after that you're left with the balance, you are in qualifying with a qualifying employer, then you can go ahead and start the process for applying for PSLF. If you have those older Perkins loans, then you want to really do that ASAP before the waiver. So you can benefit, people can benefit from both. And there was a question about forbearance and deferment. Again, those months, if you apply for PSLF, will be counted under that IDR adjustment. So even if payments were not made, if they were not made on time in full, that is the benefit of the waiver and the adjustment, so you can receive credits for those. But borrowers can definitely benefit from both. And there is no limit on PSLF for forgiveness as there is with the Biden relief. So it can be, I mean, we've seen anywhere from 5,000 to 400,000 in forgiveness. So there really is no limit on PSLF. It's going to depend on the borrower's case. It's going to be a case by case on how they want to proceed.
I
Okay.
also see a question on, whether previously consolidated loans with Navient could potentially qualify for the one-time broad-based debt cancellation. So this really depends on the type of loans that you have. So if they are direct loans and were consolidated into a direct loan, it could potentially qualify. The cutoff date was the September 29th of any new consolidated loans that to apply for the commercially held newly consolidated loans. So if your loan was consolidated before, it is likely that it could qualify. But this is another reason why it's so important to just check in to see what kind of loan you have. And if it was consolidated prior to that 9/29 date, it is likely to be included.
Okay, thank you, Aisa. It's a lot of really great questions. Some of them are super detailed, so I'm trying not to dive into too much details. Here's one: is the Biden student debt relief plan retroactive for up to the maximum amount? It's an interesting question. Is it retroactive up to the maximum amount? I think any student debt that you have, so long as if it is a, what do you call it, a federal loan, right? So long as it's owned by the U.S. Department of Education. So any amount will qualify so long as if it is a federal loan. And then, of course, it's all about your income, eligibility, and then, what, if you Pell Grant status, it could qualify for, I'm not sure what retroactive means. But the maximum amount, which is $20,000 of student debt relief, is only if you're a Pell Grant. If you had a Pell Grant given to you at any point in your student career. So freshman year, you got a Pell Grant status, you're automatically qualified for the up to $20,000. You could also, maybe your last senior year, you got a Pell Grant. That would qualify you for up to $20,000 for student debt relief. Again, income requirements have to be met as well. Let's see. Any other questions, panelists? I know there's so many here.
Yeah, there's a lot about Parent Plus loans. I just answered a few. Basically, for Parent Plus loans under the relief, there was one, if they have loans for Parent Plus for 3 different children, would it be 3 different applications? It won't. It's just one application per borrower, so it's going to be under the parent's name, so they wouldn't qualify for 10, 10, 10. Also, for the Pell Grants, for the amount for Parent Plus loans, if the parent has never received any type of Pell Grant, then it's $10,000. If the parent at some point in their own education received a Pell Grant, and it will be recorded through Department of Education, then they will receive $20,000. But if the parent has never had loans before, it's going to be just $20,000 on the total amount, not per borrower. That was one on Parent Plus loans, and then Parent Plus for PSLF. They do qualify under the waiver. Again, if they can benefit if they consolidate their own loans with Parent Plus loans. So if they have their own direct loans or FFEL loans from their own education, and then they took out Parent Plus loans, they can consolidate them to get benefit from the waiver. If they only have Parent Plus loans, whether they apply now, it's better to do it sooner than later, but they wouldn't receive retro credit. They would just start at the time of consolidation moving forward. Then they would have to accumulate the 120 qualifying payments. There were some information about or questions about taxing the relief. So PSLF is not taxable under federal tax code and state tax and California. So that's for the Public Service Loan Forgiveness. Any balance that's forgiven under that program, it's not counted as income, so not taxable. But the relief program under federal law, it is also not taxable. California law, we do not know yet 100% what that if it will be taxed or not. So we're waiting on word for that. So that's what we have on taxes. And then do you see any there's a lot, but
Yes. Oh, I see a couple that I could try to answer quickly. So would this new relief apply for loans in the future? So it's important to note that the one-time Biden-Harris debt relief program would only be eligible for loans that were dispersed as of June 30th of this year. So this does not apply to future loans. You know, as a representative of an advocacy organization that is definitely dedicated to completely, you know, addressing the student loan crisis. You know, we are certainly pushing for more to be done here for, you know, future loans being taken out. However, this relief program will only apply to loans that have already been taken out by borrowers. I also saw one question on whether or not somebody can request a refund if they paid on their loans during the payment pause, even if they haven't finished paying them off. So yes, you can request refunds. We do strongly advise you to just determine whether or not. So for example, if you have a $10,000 loan and have been paying over the course of the pandemic and could potentially benefit from this cancellation plan, you could request a refund for payments made over the pandemic and then apply for the cancellation in order to get the outstanding amount or reinstated amount canceled. That is a decision that folks should make on a individualized basis. But over the course of the pandemic, as payments have been paused, the Department of Education did announce that refunds could be available for folks to request through their servicer, and could potentially benefit either through the cancellation plan or PSLF, et cetera.
Okay, I think we have time for one more quick question. I know there's a lot of great questions, and I'll say this. We are recording all these questions. For the ones that we don't answer, we're going to answer them offline. So don't think that we're just going to get lost. One more question? You know, I think a lot of questions could be answered in our next couple of slides. So real quick, two big reminders. The Public Service Loan Forgiveness Waiver deadline is the end of this month, October 31st. Okay. At the very least, complete the help tool if you can. And then, of course, student loan repayments, they start back up in January. So again, get all your information updated and get ready for that. Finally, this is a big one for everyone. Again, we're going to share these slides, so you'll have links to all these. There's a lot of questions we had in the Q&A about, will there be links, resources? Can someone help me through the process? The DFPI has built a web page. It's dfpi.ca.gov/backontrack. It's a large repository of resources and a list of government organizations, nonprofits, legal aid groups that provide assistance to student borrowers. So go to the webpage, go through, check out the resources, check out all the different affiliate links, and find out which organization is going to be best help you in your student borrower needs. Also, we have a YouTube channel where we record and publish all of our different webinars. If you're looking for student loan forgiveness, you want to start somewhere, the best place to go is just forgivemystudentdebt.org. It kind of gets you primed and ready to go before you get on studentaid.gov. And of course, be sure to subscribe to the DFPI newsletter. We have updates on upcoming webinars, events, as well as any student loan updates that happen. We send it out to our subscribers. Also, the CFPB has a list of tools for getting started on student loan forgiveness as well. Again, this slide will be available after the webinar. You can click on these links and go further. Finally, Selena Damian is the DFPI student loan ombudsperson. Her contact email is right there. You can contact her directly if you have questions. I know she's pretty buried, so she's not going to have time to walk you through the process, but she could answer a lot of very broad questions. And if you are experiencing issues with your student loan servicer, then you can definitely give her an email and start the complaint process and figure out how you can get helped. Okay. And thank you again for joining us on this webinar. I do want to say a big special thank you to Senator Anthony Portantino for hosting us. Senator, did you have any closing remarks?
I just wanted to say it was a great panel, and I hope everybody uses the resources. Everybody's going to get the information that signed up, emailed them, and the slides, and you all did a fantastic job on this very, very important subject. So thank you all for being here, and thank everybody for participating.
Thank you, everyone. Thank you for having us.
Yep. Thank you. Have a great night, everyone.